Hello, this is the TradeSite U.S. Stocks and Futures Market Preview for the week beginning Monday, the 14th of December, 2015, ending Friday, the 18th. Welcome to what is going to be a busy week, most likely. This last week was okay. We had a couple of good trading days, and then we ran into the quarterly contract roll of futures, which always messes things up for a day or two on Thursday and Friday. Friday was still a decent trading day. Thursday was a little light, and frankly, Friday, when you look at it, the futures were pretty non-directional in terms of sticking to technicals because of the contract roll, but some of the stocks still worked out all right. Here's a look at the ES front month futures contract. This is the daily chart. This is a new low close, just under 2,000 for the last 2 months. So the Santa rally, I guess, is not in play at this point in time. Let's go through first crude oil. Can you believe this? 35.6250, new low close on crude oil. See if we can get oil back under $1 at the pump. Gold bounced $4.50 off. Notice the 13 buy signal. That's actually worked a little bit here. All right, so the S&P cash index breaking that red static trend line. Lost about 40 points for the session. A big chunk of that was a gap. We'll look at that when we look at the intraday action from the week. NDX also gapped down and kept going. Lost 105.49 points. Still well above its static trend line. Not necessarily a 2-month low yet, but not looking great either. Here's the SOX index down 13.45. Not a big deal there. Biotech's lost 97.39. And even that's not a huge deal compared to some of those other indices. VIX was up. Look at the static trend line exactly. How technical is that for you? That's from the last 9-bar move down. Remember, this is a daily chart. That 9-bar move down was in the beginning of October. And that static trend line hit exactly today off of the 13 buy signal. I mean, it's amazing when the Seeker tool can work this specifically, not on an index of the markets, but on the VIX, which is a volatility index. Absolutely amazing technical action there. And of course, with that 13 buy signal in place, now we can go and potentially break even higher, and that would lead to a downward move in the market. The trend got another big reading, 1.76. So even though two big numbers have fallen off in the last 2 days since our last report, back from 9 and 10 days prior, now we've got another high reading. So 1.05 is the current 10-day moving average of the trend. Best volume of the week on Friday, even though not much happened. 1.9 billion shares on the NASDAQ. Advanced decline ratio. Ooh, this is scary. Negative 2,152 on the NASDAQ. Negative 2,351 on the New York. One of the worst days for market breadth in terms of the negative stocks completely outpacing the advancing stocks of the year. Actually, of the year. And that's a real interesting thing coming into Christmas. But also, we've got some big stuff happening next week. So let's talk about that in a moment. Google lost $9.62. Apple lost about $3, which doesn't even register barely on Apple. Amazon down 22. Netflix down 4. Everything coming in once the market starts to come in. All right, let's take a look at the intraday action from the week. We're going to have to look at, let's see, hang on a second. This is the front month contract. So this will keep the volume in it for you. You can see that started out the week fairly flat, dipped a little, rallied into the close on Monday. Tuesday, gap down, didn't fill, basically a flat session. Wednesday, small gap, rallied up, almost filled the gap from the prior day, then sold off, came back a little late. Thursday, a little upward gap, tried to push higher, came back down late. And then Friday, the gap down and the move to the slightly lower. Again, you can see how untechnical that type of action was on Friday, and that's because of the contract roll in futures. Here's the NASDAQ side, not much different. You can see if I use the regular NASDAQ symbol instead of just the front month contract, you can see how this is the March contract, the one we'll be trading from here on forward for the next 3 months. Monday, Tuesday, and Wednesday, no volume in that contract. Thursday, it starts to pick up. And then Friday, see how you finally got true volume in it. Same thing on the ES. See how the Thursday, a small amount of volume. But that's why the market is so non-technical on Friday of the quarterly contract roll, because even that volume you see on Thursday is nothing compared to what usually is there, and therefore you don't get a lot of technical traders because there's not enough action there. Here's a look at the December contract, just so you can see the volume dropping off on Friday. So it's all leaving this contract and going into the other one. All right, so what do we have to look forward to this next week? Well, here's the economic data list. I'm going to point out that on Monday, which is the 14th, there is no data due. Tuesday, we got the CPI and Empire Manufacturing an hour before the bell. That can move the market. We've got Housing Market Index at 10, and we've got the net long-term tick close at the close, but it also starts a 2-day Fed meeting. So Monday is a Monday. Monday could be all right this week. Tuesday, because there's not an option expiration from this last week. So Monday could be decent. Tuesday, CPI maybe will move us around a little early, but then we sit down for that Fed meeting, that 2-day Fed meeting. And then Wednesday, we've got MBA Mortgage Purchase Index at 7 a.m., housing starts and building permits an hour before the bell, capacity utilization and industrial production 15 minutes before the bell, the weekly crude oil inventories an hour into the market, and then at 2 p.m., the Fed rate announcement. Will they finally do the quarter-point raise that everybody's been anticipating? That will be resolved finally and lead to some sort of move potentially in the markets. Thursday, the weekly initial and continuing jobs claims, the current account balance, and Philly Fed, also leading indicators, and then the weekly natty gas. Friday, no data. But in all of this, because we just cycled out of those futures contracts, we have triple expiration this next Friday. So typically you would expect to see an options unraveling move on Wednesday, maybe Thursday. I would not be surprised if we don't see it Wednesday, but it's going to be masked. If it does happen, it could be late in the day instead, masked by whatever comes after the Fed. But hopefully Thursday's got some opportunities for some action as well. Friday should be a complete waste of time because everything will be pegged to the expiration prices, should be anyways for the most part. Triple expiration is usually a very unexciting, uneventful day. So Monday, some possibilities here now that we're past the contract roll. Tuesday, CPI maybe gets us going early. Maybe things start to die off a bit as we head into the Fed meeting. Wednesday, wait for the Fed. And then after the Fed, maybe some excitement if we finally get either way. I mean, whether you get, everybody's expecting it, so whether you get it or not could move the market. Thursday, somewhere between Wednesday and Thursday, the options unraveling move. And then Friday, of course, unexciting. That's what we're looking for. Charts, as usual, brought to you by eSignal 12. We will be in the lab helping you make money. If you have not taken a trial of our services, feel free to do so. Don't forget that you can still purchase the 6-month mentorship program with the money-back guarantee this year, and it is a tax write-off for you this year if you get it done. So have a great weekend, great trading week. We'll talk to you this week.